Good morning, ladies and gentlemen. Welcome to FXTM's Week Ahead, Market Themes to Watch Out For. Before moving forward, I want to confirm if everybody can hear me clearly and see my screen. Perfect. So what we are going to discuss today, like we do every week, we have a review of the markets last week. After that, we discuss the key themes to look out for in the week ahead. Once we have a clear picture of what to look out for in the week ahead, we'll speak about a breakdown of the economic calendar. This will be accompanied by technical and fundamental setups. And finally, we'll have a question and answer session for anyone who has any questions on the financial markets. A review of the markets last week. I must say last week was certainly quite turbulent and eventful for financial markets. The main theme, or one of the key themes, was how markets were gripped by fears of a potential global trade war. So since Donald Trump has actually moved forward to impose those steep tariffs on aluminium and steel, concerns have heightened over this potentially sparking a retaliation from other major US trading partners, and such is seen to negatively impact global growth. Hence, we can see why market sentiment overall is quite skittish. If the fears continue to heighten over the tariffs, sparking retaliation actions from China, Europe, stock markets and risk appetite could be negatively impacted. In the United States, we had political instability. This was after Donald Trump unexpectedly sacked Rex Tillerson and Gary Cohn. Such fueled market speculations that this will potentially allow President Donald Trump to move more aggressive with his protectionist policies. Now, naturally, protectionism in the United States is seen to negatively hamper impact global growth, and such this is why we saw stock markets looking quite shaky last week. The dollar found a friend in Larry Kudlow. So Larry Kudlow is actually the White House's new economic advisor. Before Larry Kudlow's statement, the dollar was actually under some pressure because markets were seeing the fears of a trade war negatively impacting economic growth in the United States. But, quote unquote, Larry Kudlow said that to buy the king dollar and sell gold. So these comments simply supported the local currency, and this is why at the end of last week we saw king dollar back in town. Naturally, after Kudlow's statement, gold found itself under notable selling pressure thanks to a strengthening dollar. We know that gold is priced in dollar, and gold is also a zero yielding asset. So in a situation where expectations continue to rise over higher US interest rates and the dollar continues to appreciate, gold is likely to remain under pressure. Now, finally, looking at the cryptocurrency space, Bitcoin dipped below the 8,000 level last week. This was due to, number one, Google making an announcement saying that they would ban the advertisements of all digital currencies. Number two, the IMF calling for a global crackdown on digital currencies. And finally, Congress bashing cryptocurrencies during a meeting last week. Even though Bitcoin has, on many occasions back in the past in 2017, displayed resilience against a wave of negativity, price action now continues to suggest that Bitcoin is finding it increasingly difficult to defend itself. Hence, we saw why prices were dipping below the 8,000 level. So let me recap once more. Last week, markets were gripped by fears of a potential global trade war. Following Donald Trump's unexpected announcement to impose steep and severe tariffs on aluminium and steel, this has sparked fears of retaliation actions from US major partners such as China and Europe. Such has even fueled further concerns of the developments negatively impacting global growth. When we have a situation where markets are becoming increasingly fearful over global growth taking a hit due to fears of an international trade war, we can see risky assets such as stock markets being under pressure, while safe haven investments such as the yen and gold in favor. We had political instability in Washington last week, which also weighed heavily on VIX sentiment and punished the dollar. So the unexpected sacking of Rex Tillerson and Gary Cohn was seen to allow President Donald Trump to move forward with a more aggressive stance on protectionism policies. Although the dollar weakened at the first half of the week, bold comments from the new White House's economic advisor, Larry Kudlow, on how he would buy King Dollar heavily supported the currency. Naturally, in a situation where expectations are heightened over higher US interest rates and the dollar appreciates, this is likely to heavily impact gold, which actually sunk last week. Finally, looking at Bitcoin, Bitcoin dipped below the 8,000 level thanks to number one, Google making an announcement that they will plan to ban the advertisement of digital currencies. Number two, the IMF calling for a crackdown on cryptos. And finally, Congress bashing cryptocurrencies in a conference last week. As I said previously, although Bitcoin has in the past showed resilience against a slew of negativity, price action is suggesting that Bitcoin bulls could be tired, and if prices are unable to break back above the 10,000 psychological level, Bitcoin could be exposed to further downside. So now we've covered what to look for last week, the key themes to look out for in the week ahead. As we said, this is going to be an explosively data-packed week. We have the FOMC meeting, which will be in sharp focus. Now, although markets widely expect the Federal Reserve to raise US interest rates by 25% this week, which is already heavily priced in, I think the main focus, of course, will be the economic projections, number one, and number two, new Fed head Jerome Powell's stance on monetary policy, and if the Federal Reserve will provide fresh clarity on US rate hike timings in 2018. Naturally, a hawkish sounding meeting which provides clarity on further insights on rate hikes is likely to heavily support the dollar. But if the Federal Reserve disappoints markets and doesn't provide any fresh insights and even is slightly cautious, the dollar could find itself under notable pressure. Looking at stock markets, we expect stock markets to be highly sensitive ahead of the Fed meetings and trade war concerns. In a high interest rate environment, or when speculations rise over higher rates, stock markets are naturally under pressure. At the same time, if trade war concerns intensify this week and we have a situation where risk aversion becomes another key market theme, global equity bears could re-enter the scene. Looking at the British pound, we can see that the sterling remains pressured by the ongoing Brexit uncertainty. We have the Bank of England meeting, we have the inflation data and average wages. Naturally, markets expect the Bank of England to remain status quo and not move forward with change in monetary policy. I think the main interest this week for the British pound will be the inflation and, of course, annual wages. The inflation story in the UK has showed that concerns over inflation hitting its highest level, around 3%, has weighed heavily on the pound. If we do have a situation where inflation stabilizes and moderates, goes towards the expectations of 2.8%, and at the same time, wage growth continues to accelerate, this could quell expectations of the Bank of England moving forward with raising interest rates. Looking at oil markets remain a battleground for OPEC and US shale. On one side of the equation, reports of demand potentially rising have supported oil markets, but we must also always keep in mind that soaring production from US shale remains a threat to higher oil prices. So recapping once more, the FOMC meeting this week will be in sharp focus, although it's widely expected that the Federal Reserve moves forward with raising interest rates by 25 basis points. Much of the focus will be directed towards the economic projections and the fact that this is the first policy meeting from new Fed head Jerome Powell. Markets will be taking very close attention to see his stance on monetary policy, and if he provides fresh insight into the Federal Reserve um, raising interest rates 3 times or 4 times this year. Stock market sensitivity, simply because um, investors are likely to remain on the defensive ahead of the Fed meetings. At the same time, the trade war concerns have left most on edge. A situation where risk aversion intensifies could invite global equity bears back into the arena. Looking at the British pound, the Brexit story and the uncertainty continues to be main themes that continue to negatively impact the British pound. Markets widely expect the Bank of England to leave monetary policy unchanged this week, but most attention will be directed towards inflation, which is expected to drop towards 2.8%, and will be seen if wage growth actually accelerates. The combination of inflation falling and wage growth venturing closer to inflation could quell market expectations of the Bank of England moving forward with actually hiking UK interest rates. Finally, looking at oil markets. Although oil markets remain supported by optimism over OPEC's production cuts, rebalancing markets and rising demand also playing a role, we all have to keep in mind that soaring production from US shale remains a threat to higher oil prices. Before we have a breakdown of the economic calendar this week, does anybody have any questions? Okay. So on Monday we have the G2 meetings, which is a full day event. Of course, the main focus and the main talk today in the G20 meetings would be the United States trade policies. I believe any signs of there being any tensions between the US and China during the meeting could spark market jitters, and such is likely to pressure stock markets while boosting the traction for safe haven investments. On Tuesday, we have the monetary policy meetings in Australia. We have the all-important CPI, inflation report in the United Kingdom, and the second day of the G2 meetings. As we said earlier, on Tuesday with the inflation report, markets will be looking to see if inflation eases from the 3% level to 2.8%. Such is likely to reduce the pressures of the Bank of England moving forward with raising UK interest rates. On Wednesday, we have average earnings from the United Kingdom, followed by crude oil inventories at 2:30, the all-important FOMC statement and economic projections at 6 p.m. UK time, followed by the press conference, the first press conference from Jerome Powell at 6:30 p.m. As we suggested or stated earlier, looking at Wednesday with the FOMC statement and economic projections. If the economic projections are boosted, and the Federal Reserve continues to display optimism over the US economy, this could boost sentiment towards the United States. What markets will be paying very close attention to on Wednesday would be to see how hawkish Jerome Powell is, and if any fresh insights are shared over if the Federal Reserve will be raising interest rates 3 to 4 times this year. At 8 p.m. on Wednesday, we have the RBNZ rate statement in New Zealand. Thursday, early in the morning, we have the employment change in Australia and unemployment rate, which we were both released. Retail sales for the United Kingdom will be heavily looked at as well. As we know, retail consumption is a big role in growth in the United Kingdom, and any signs of retail sales picking up could boost sentiment towards the United Kingdom and support the British pound. 12 p.m. We have the MPC official bank rate votes in the UK, which is expected to remain unchanged. And we'll have the monetary policy summary, which could provide insight to the thoughts of what policymakers feel about the Brexit developments and health of the United Kingdom. Friday is slightly quiet. At 12:30 we have inflation in Canada, and 12:30 p.m. core durable goods orders in the United States. So the fundamental trading setups that I'll be looking for this week. I feel that sentiment remains impacted by US politics, trade war concerns, and of course central bank meetings. US politics has the ability to create uncertainty and spark risk aversion. Such will continue to negatively weigh on sentiment. Looking at trade war concerns, this week, especially the G20 meetings and Donald Trump, if there's any signs of the tensions escalating, this could also impact sentiment. Finally, with the central bank meetings, while markets already priced that the Federal Reserve are going to move forward with raising US interest rates by 25 basis points, much focus will be directed towards the hawkishness, or if fresh insight is provided on how many times the Fed will raise US interest rates in 2018. Looking at the dollar and sterling, the dollar and the British pound are both currencies that remain highly sensitive to monetary policy speculation. So if there's any unexpected surprises in the meetings this week, this could result in volatility in the sterling and the dollar. Looking at gold, gold was under pressure last week thanks to an appreciating dollar and could be pressured further this week if the Federal Reserve is more hawkish than market expectations. Although we have trade war concerns that are likely to stimulate appetite for riskier assets, it seems that short-term bears remain supported by expectations of higher rates and an appreciating dollar. We should also take a look at digital currencies this week. After digital currencies were pressured by renewed crackdown fears last week, markets will be paying close attention to see if it rolls over this week. Looking at Bitcoin technically though, 10,000 seems to be a very important level, and sustained weakness below the 10,000 level in Bitcoin could result in further downside. So now we've covered the fundamental trading setups, let's take a look at the technicals for this week. have a chart loaded here on the dollar index on a weekly time frame. For an extended period, we've been saying that the dollar index remains under pressure on the weekly. Looking at things fundamentally, it could still be fair to say that the dollar remains driven by conflicting driving forces. On one side of the equation, expectations of higher US interest rates, better than expected economic data from the United States have supported the dollar. And finally, also bold comments from Larry Kudlow on how he would buy King Dollar are factors which continue to support the dollar. But on the other side of the equation, fears of a potential global trade war negatively impacting the United States, and the fact that central banks across the globe are slowly raising US interest rates have pressured the dollar. This is why we say that the dollar remains driven by conflicting fundamental themes. Technically though, on the weekly charts, the dollar index remains bearish or under pressure below the 91 resistance level. A failure for bulls to break above this level could result in the dollar index trading back towards 88. Alternatively though, if bulls are able to be injected with enough inspiration to push the dollar index above 91, further upside could be on the cards. Looking at the euro dollar received a blow last week following Mario Draghi's dovish comments. Even though market expectations still remain elevated over the European Central Bank, ending QE before the end of 2018, it seems that low inflation concerns have started to weigh on the currency. The fact, or if inflation in Europe continues to remain depressed, this could weigh or complicate the European Central Bank's efforts to normalize monetary policy, and such has inspired Euro bears back into the game. Another thing that has actually impacted the euro dollar last week and may continue to impact the euro dollar this week is if the dollar continues to appreciate, a combination of a weakening euro and strengthening dollar could pull the euro dollar back towards the 122 dynamic resistance support level. A breakdown below 122 may open a path towards 120. The pound US dollar for an extended period has actually found itself in a rough range. We can see that on repeated occasions, bulls have struggled to actually secure a daily close above the 1.400 resistance level. It seems that the pound US dollar may be waiting for a catalyst, and such could come in this week, either in the form of the Bank of England policy meeting, inflation data, wage growth, or retail sales. If data in the United Kingdom fails to meet market expectations and Brexit uncertainties intensify, this could result in a pound being exposed to downside risks. Alternatively, if the dollar weakens and the Bank of England is more hawkish than expected, a breakout above the 1.40 resistance level may result in a pound US dollar trading towards 14230. Looking at the dollar yen initially was dictated by the dollar's performance. But now we have a situation here where risk aversion has actually strengthened the yen. So if risk aversion continues to boost the yen and the dollar yen breaks below the 10550 level, 1040 could be on the cards. Alternatively though, a breakout back above 107 could result in further upside. This week we have the FOMC meeting and G20, and such high-risk events are likely to impact the yen. For an extended period, we've been looking at the Australian dollar US dollar and seen how important the 77.50 support level has been. Last week, bears were able to conquer the 77.50, and this resulted in a decline towards 76.80. Now, A breakdown below 76.80 could pull the Australian US dollar lower towards 76. If we do have a situation where dollar weakens and bulls are able to push the Australian dollar back above the 77.50 dynamic level, we'll be seeing if the Australian dollar could trade back towards 79. Gold was under pressure last week thanks to an appreciating dollar. We can see that gold has been in a wide range for an extended period, but the breakdown below the 13140 has encouraged a decline below the 1310. Looking at gold in the bigger picture, it seems that the 1300 levels is an important psychological region. If the downside persists, and bears are able to drag gold towards 1,300, technical traders will continue to observe if gold could recover from the 1,300 level higher, or eventually breaks down below 1,300. As we said earlier, gold performs badly in a high interest rate environment, and if market speculations continue to mount over the Federal Reserve raising interest rates more than initially expected, gold is likely to remain under punishment. So now we've covered the technicals and the fundamentals. Does anybody have any questions on what to look out for in the week ahead, trading setups, key themes? Okay, we have one question from Jonathan about the pound US dollar and if the Bank of England are going to raise UK interest rates. So as we said earlier, the market expectations of the Bank of England raising interest rates this week is quite low. We have the Brexit uncertainty that is likely to keep the Bank of England on standby. At the same time, before the central bank takes action, they'll be closely looking at to see if inflation stabilizes, if economic data beats expectations, if retail sales is rising, and if wage growth is accelerating. These factors are very important in considering if the Bank of England will take action this year. Technically, though, with the pound US dollar, all eyes will be on how prices react around the 140 resistance level. A breakout above this region could result in further upside, but another instance where bulls are unable to conquer the 140 resistance could result in the pound US dollar trading lower. Okay. So, ladies and gentlemen, thank you again for attending today's week ahead webinar. For those who missed the first parts of the webinar, please be free to look at the post-recorded version on my FXTM. Also be free to subscribe to our YouTube channels on Tuesdays and Thursdays for more live feeds in the FX and equity markets. Happy trading, everyone, and I'll see you all next week. Thank you.